What's good? What's good? What's good? People, traders, and dedicated gold chasers. Going on, boys? What's going on, girls? We're on episode number 4, right? I'm back this in on the road to 100,000, aka 1.8 million rands. I'm just saying. But anyway, just a quick check-in since I haven't done a back test in a minute. Quick check-in. I am almost done with the back testing. Phase 1. Then I'm gonna move on to phase 2 next week. And yeah, pretty much that's the goal today and tomorrow. Finish this phase 1 back testing because I'm almost done with it. And then thereafter just go straight into phase 2 and try and wrap up phase 2 of the back testing. Phase 2 should be fairly quick, fairly quick, and all we're really trying to do is test each phase of our trading plan and get to a point where we can really say that this is what the numbers is across each phase or each step in the trading plan, right? Yeah, let me just put this blanket on. It's cold, guys. It's proper cold in Cape. Apparently there's gonna be a storm. I don't know, but anyway, let me actually just take you guys through my week first before I jump into any back testing. Let me take you guys through my week, and then I will show you exactly how this week ended. I didn't think it was gonna end the way it did. Just a real quick like disclaimer. I didn't think it's gonna end the way it did, but yeah, it started off great, ended off quite mid. So yeah, just a heads up, bro. Anyway, looking at my so you're looking at my journal right now. It's obviously my annual journal, my yearly journal for the whole year so far. So we've taken 94 trades so far with a win rate of 55.32% and a return of 13R, right? You can take a look at the annual equity curve. It's looking quite clean in that, like, we're moving to the upside for the most part. And yeah, you can see that the way we ended this week is not the best. But anyway, we still ended the week up 2R. So jumping into filtering for this specific week. Let's filter from the 21st. You can see 4 trades, 50% win rate for a total of 2R. That's this week alone. Now, bear in mind that last week I didn't take no trades, nothing. And this is just a quick recap of the week before I get into backtesting, guys. Just a quick recap, right? 4 trades. We started off the week wonderful. We went up 4R, and I'll take you guys through it. And then to the back end of the week, we lost 2 trades for a total of 2R. Now, I think in total, I am up for July. I'm up around 6%, 8%? No, 6%, sorry. Yep, 6R. Total of 14 trades, 6R. But yeah, like, so if you look at it in the grand scheme of things, like all the small stepping stones throughout each week, 2-3%, it adds up to a really good RR at the end of the month. So I don't feel any type of way with just making 2R. What I do feel some type of way about is losing those 2 trades. And yes, it's part of my trading plan and it's part of like the strategy, because I traded according to the strategy perfectly. And I took all the trades exactly the way they were supposed to be taken. However, it's just that they lost. And I think there is something that I learned from one of my losses, and I'll show you guys. Let's jump straight into the trades for this week, actually. So as you guys can see, 4 trades. First trade of the week. So I'll take you to the before. So it was pretty simple, right? The first trade, let me see if I have a 15-minute chart. Open. Okay, here we go. So this is the 15-minute chart, right? So we get to the charts in the morning, and we take a look at the higher time frame. And what we can see is that we had the daily and the 4H green, and we had 4H correlation, right? And that simply means that now we have the daily time frame and the 4H time frame agreeing, which means that structure from a higher time frame perspective is starting to align. We then have all the 4H, all the pairs across each other having a similar 4H. And what that means is that we have sentiment in the market. The sentiment in the market was that at the current time when I took this trade, it was that pound was weak and yen was relatively strong, right? So I put those together and then I simply wait for, so my initial area where the market needed to break was these areas, right? So I had a level created around here and we broke it, but then the next candle didn't continue. So what I simply did was I waited for this candle to close, the bullish candle. When the bullish candle closed, it formed a new level in the market. The next level broke, or the next candle broke that level, and all I simply did was I went to the 1 minute and I marked structure, and you can see that we were forming lower lows, lower highs. Mark my recent lower low. You can see that this 15-minute candle closed within the range. So I waited for this push up on the wick, and when that push up on the wick occurred, I placed my sell stops above previous lower highs, and just anticipated price action is going to go down. Now bear in mind that if you take a look at this right here, right, we're going from 203,500 to around 20, my entry is only 202,750, so that's more than 75 pips already the price action move. So I'm anticipating that price is going to take a long time to hit my TP. I'm anticipating that we're probably going to get in and then it's going to slow down just because based on this big push. But I understand that like when price meets my rules and my criteria to actually trade, then you just fucking take the trade, mate. Like regardless of what happens, you take the trade, right? Took the trade and swear down, like in 5 to 10 minutes. Look at that. That's one 15-minute candle, bro. There's still 4 minutes left. So like in 10 minutes, TP was it, bro. And that's 50 pips, bro. Do you know how long it usually takes for pound yen to give you 50 pips? It takes like 2, 3, 4, 15-minute candles on the average day, just because the average 4H range for GJ is around 60 to 80 pips on the better days. It's usually around 40. I'd say if we doing a safer pip range, it's usually be around 40 to 80 pips on the average day of the 4H, bro. And here we had a perfect playout, bro. A perfect fucking playout. And I couldn't be more chuffed with this trade. Especially bear in mind that the week before this, so last week, we had a total of 0 trades, bro. Like nothing. So now when I'm getting to the markets, I'm obviously hyped. I'm ready to trade. Bro, there's no news. There's nothing. Like there's nothing stopping me from trading. And I'm thinking, hey, am I setting myself up for failure here with this trade? Just because on the basis that, as I mentioned, this 3 candles that pushed down was like 75 pips already. So now I'm thinking like, bro, this candle moved 75 pips, is going to move another 50. And it's natural to think that, knowing like how the pair moved and its tendencies. But at the end of the day, the trade is the trade. We went up 2% with this trade. Let's move on to the next trade, right? The next trade, you can see we banked another 2%. And it's really the same thing. I wonder if I have a 15-minute before. Let me see. Do I have a 15-minute before? Let's see. Here we go. So this perfect depiction of what was supposed to happen the first time. So we have a downtrend in the market. You can see the price had these pullbacks, but it never really pulled back or broke previous lower highs to the left-hand side, right? And since we never broke previous lower highs to the left-hand side, all we really do in here is ranging. And until we break the previous low, I think my biggest thing was that as long as Asian session doesn't range and it starts pushing to the downside, I should be fine. Because if the previous session starts ranging, then it's going to be big problems, right? Because then like you have a chance of getting I don't want to use the word manipulated or stop hunted, but like you have a chance as a breakout trader that your price action might just like break out and then break back inside a range. And those things happen, bro. It happens. I just don't subscribe to the theory behind it. I find reasons why my trades lose, and then I just take it away, right? As a breakout trader, I just don't trade those times where I lose. It's simple, right? So we had Asian session from around 2 o'clock South African Standard Time. You can see we started creating these lower highs, lower lows within the range, right? But we never broke the previous lower low. And when price action actually broke the previous lower low, you can see it right here. Price broke the previous lower low. All I did was I looked at 1 minute structure and I said, okay, we're forming lower highs, lower lows on the 1 minute structure as well. We had the break of structure right here, forming a new lower low. I mean, that's the previous lower high right there. Set my sell stop around 201,770, a couple pips away from the actual price. My stop loss is 2 pips above the high. And then the rest is history, bro. Now, let me not say the rest is history just as simply as that. What you can see is, so bear in mind, Monday we came to the charts, we won in 15 minutes, right? This first 15-minute candle gives me a break even. This second 15-minute candle, I'm fine with it because I know like usually I'm gonna have to wait. This third 15-minute candle, bro, I swear, right? It got so close. It was like 2-3 pips away from my this bearish candle, 2-3 pips away from my TP. And all I could personally think was, okay, it's gonna hit, it's gonna hit, it's gonna hit, and it didn't hit, bro. Then it came back, and I'm thinking, I'm fine. I'm up 2% for the week. If I get taken out at break even, fuck it, it is what it is. You know what I mean? And yeah, and then does that, and when the next candle, like the next 4H candle opened, and this happened where we created this like solid level in the market on the 15-minute time frame. I just knew that as long as we're going to take out 15-minute candle lows, then we're going to continue and like hold highs. We're going to continue to the downside, because what that simply means is that on the 1 minute time frame, we're forming lower highs, lower lows, and it's the actual trend on the 1 minute time frame. So yeah, that is the two winners for the week, right? Let me jump into, so this first loser, I'm proud of it in that like I followed all of my rules, right? Let me just take a sip of coffee. I'm proud of it in that I followed all of my rules, right? However, what I'm proud of is the epiphany and the light bulb moment that came from this trade. And what was that light bulb moment? So ultimately, I had a breakout trade around this. The second trade here was the 23rd. What was the 23rd? I think the 23rd was Tuesday, if I'm correct. Tuesday, the 23rd. Tuesday is. So the 23rd is Tuesday, right? I had this 2%. I'm up, bear in mind, I'm up 4% at this current moment. Then around 12:30, we get a breakout on the 15-minute time frame. And let me show you this. On the 15-minute time frame, we get a breakout, right, of a key level. So initially, this was my level here. We broke out, but I didn't get in because I didn't like the volume of it. Then we created a new level. I like the volume of this candle. It feels good. It feels like it's going to continue, right? So we get the breakout. My epiphany that I had is, obviously I need to check it based on my numbers. And like I've taken 90 trades so far for the year, and I can go against all 90 trades and make sure that the days when I take 2 breakout trades, what is the average of me winning the second one? Now, if the average is very low, then when I take a breakout trade, I won't like take 2 trades on that day. Then I only take 1 trade, right? But the theory behind the epiphany is that if you take a breakout trade, because my first breakout trade was here, I believe, somewhere here or here, I'm not sure, somewhere here, I think, right? First breakout trade is down here, down here, right? First breakout trade is down here, then it hits TP around here. Now, this thing had already moved like 50, 60 pips, bro, 70 pips. And now, essentially, what I'm doing is I'm asking the daily candle to move more and move an extra. What is that? From 1, so that is 17 and 17. I'm asking the daily candle to move an extra 100, like 34 pips, bro. 34 pips, imagine. So that's my epiphany, is that like if we get an initial breakout, right, and you win the trade and it actually moves like 40, 50 pips to give you a 1 to 2, then what's the point of like taking another trade or another breakout trade when price action had already moved that much within the day? Do you know what I mean? And yes, like we try to capitalize on every single opportunity, but like at the end of the day, if the stats, this is where I draw the line. If the stats say it's good, I'm gonna continue. If the stats say it's bad, I'm cutting it out. But I can only cut that out at the end of my 20 trades. Now I'm 8 trades into this 20 trade set, and so I still have 12 trades left to go before I can do anything. I'm still gonna continue trading the way I should. If there's 2 breakout trades on the day, I'm gonna take the 2 breakout trades. I still want the numbers to play out for me to have an accurate like set of numbers to then like make a decision on it or from it. So yeah, let me show you the after of this trade. So here's the after. Bom bom bom. Shit. Ain't that a bitch, bro? But yeah, it is what it is. It's part of the game. This one I didn't feel any type of way about. It just is what it is. I lost price. Yeah, we learned a lesson. It's a lesson that we're going to take into account as we move forward. Let's go into Friday's trade. Now, Friday's trade to me was pretty clean in that it moved up, but I don't know. I don't even know how to explain this, bro. So, like, we had break of structure, pullback, higher low, higher high, right? We then came back into the higher low. London session was pretty ass. We were looking for sells. There was no sells. We didn't break below these areas. Price action then broke above the area. And to be fair, I think I should have entered after this candle, just because my levels are usually placed on the bodies and not on the wicks, right? But I got there a little bit too late, and then I still took the trade. Now this is the first mistake that I've made. Uh, you can consider it a mistake. You can also consider it as part of the plan. It depends on how you look at it. But yeah, more so like a mistake, I guess, just on the basis that I wanted to trade, and I shouldn't be doing that. I shouldn't be trading in that way. But okay, we still ended the week up. I'm looking forward to next week, and that's been my week, bro. Let me show you the result of it. This thing just tumbled, bro. This thing tumbled out the air, bro. And then I checked the chart this morning before I came on the live. That thing eventually almost broke that higher low that was formed, bro. So structure might have shifted bearish. I'm not too sure from a 15-minute perspective. But yeah, guys, that was my week. Just one loss. Look at the equity curve and some of the results, right? So in total, we took all the trades that we took were breakouts. We have 50% win rate. I'm surprised that we didn't get no break evens this week. It was 2 wins, 2 losses. That's quite surprising. 3 shorts. You can see the shorts this week were really good. I think that's just largely due to the fact that the market was trending to the downside this week, right? And then this long was on Friday, where I anticipated a bit of a pullback essentially and a bit of a retracement, right? Monday, Tuesday, Friday, those are the only days that we traded. You can see that 9 o'clock win, 8 o'clock win, 12 o'clock and 1 o'clock looking ass. So New York is not looking the best at the current moment. London session for the past week performed really well. And yeah, you can see that this past week, we had 0 drawdown. Our average return is 0.63%. Max return is 4R. Now, our goal and our plan is to find out how do we hold on to our 4R. Now, at the end of the day, I don't think as a trader you'll always be able to hold on to your max return for the week, because sometimes you get a opportunity and the opportunity meets your criteria and it just loses, and that's why there's risk management and all of those other things in place, right? But I'm trying to find ways to really stay on top of holding on to this max return. Like that's what I'm trying to do. Yeah, we'll see. And that's my week, guys. That's my week. So let me stop sharing this specific screen, and then let me jump onto sharing the charts and start with the backtesting. Start with the backtesting, bro. Start with the backtesting. Okay. Okay. Oh, before we go in, guys, if you do have any questions, because I won't be looking at StreamYard for too long. If you do have any questions, you can pop it in the comments. Yeah, any questions, you can pop it in the comments, and I will try and answer to the best of my ability, man. But yeah, let's jump into it, and we will. Let's see. Let's start. Okay. So if you guys haven't seen the Excel as yet, let me see if I can do this before I start. So let me just do this, show you guys the Excel. So share screen, window. Here we go. Okay. So this is the Excel that I'm using. So this is basically, from my point of view, this is phase one, as I mentioned, of my trading plan. And within phase one, we look for like bias building, and we look how to determine the bias within within the markets and within for pound yen specifically. And the more we find the numbers, and the more we can average out what the numbers are or is, then you can get your stats behind it, and you can understand what the chances of things playing out is. So if you just take a look at the stats for June 2023, for instance, you'll be able to see that we took a total of 16 trades, 11 trades played out, and 69% win rate, essentially, right? Now this doesn't mean that we actually got a trade, or it doesn't mean that we actually won. What this simply means is that, for instance, this basically means that you can determine bias, and the chances of that bias playing out, or the chances of you determining the next 4H candle, is quite high, at a 70% chance of us determining this next 4H candle. That's really good. And you can see for Mondays, you can see across the whole of June, we had two specific the next 4H candle went 100% of the time in our direction, which is brilliant. Then when we got to Tuesdays, all of Tuesdays had daily and 4H correlation, and what you can see from that is that we had a 75% chance of determining the next 4H candle. And why is it important to know that you have a 70% or 75% chance of determining the next 4H direction? Because all we doing as traders, as you can see from my trades that I've taken, all I'm doing is trading the next 4H candle. And if I have a 75% chance of determining what the next 4H candle is, then that means that I have a higher chance of winning, or I have a higher chance of determining that the direction of in which the market is going, right? And all I need to do is find a way to specifically enter the markets. And yeah, that's basically it. Then if you get to Wednesday, you can see that we had two trades with one going in the direction of the trade, of the anticipated direction, 50%. And then for Thursday, and this is the whole of June, right, guys? So we've put together this Excel sheet, and the way I basically determine direction, you can always just go back to the first backtesting session, episode 1 of the backtest with me. But basically, the way I determine, and as you saw on my journal, the way I determine directional buys for the next 4H, basically for London session and the New York session, is the daily, does the daily and the 4H on pound yen align? If it aligns, you have a potential trade. Is there 4H correlation across multiple pairs? If there is, 5 out of the 6 pairs align and have the same direction, then you have a potential trade. And does the daily and the 4H plus 4H correlation align? Then what is the chances of the next 4H playing out? And that's like my daily bias, right? Or my session bias. That's what I use as my indicator to tell me I have proper bias in the market for the appropriate session. So whether it's London session or New York session. And the purpose behind this is just to get the stats for us to basically just know what exactly the stats are with regard to things playing out, right? So on a Monday in June specifically, you'll be able to see that like 2 trades on the 4H in the next direction, 2 trades. So that's the purpose behind it. But anyway, let's get started with the backtesting, and let me stop sharing. That's the Excel sheet. Let's share screen, share the charts. There we go. Okay. So what we'll be doing now is we'll be going through and checking our work real quick. So let's check the 5th of July from a daily time frame perspective. 5th of July 23. So if we trade in the 5th of July, we need to determine what the previous daily candle was on the 4th of July. On the 4th of July, the Tuesday, previous daily candle was bullish. And okay, so now we're going to see, do we have 4H agreeing with the daily time frame? 3 o'clock. Okay, so we have a bearish candle. So what that means basically is that the daily and the 4H don't align. So now we're going to check 4H correlation to see if we have 4H correlation across all pairs. Okay, that's 2 bearish candles. Let's see. That's 3 bearish candles. That's 4 bearish candles. That's a bullish candle. Do we have 5 bearish candles? That's a bearish candle. Perfect. Now let's see what the next candle on pound yen did. It's a bearish candle. So as you can see, we had 4H correlation, and we could determine effectively what the next 4H candle was going to do. So let's just measure from there to there. We have 43 pips. So that's all we're doing, guys. That's the exercise. That's literally the exercise, right? So we're determining the next 4H candle. And the reason for that is because if you trade London session and you trade London open, South African Standard Time, London opens about 8 o'clock South African Standard Time. No, 9 o'clock South African Standard Time. Sorry. So if you trade in from 8 to, let's say, if you trade an hour before London, you trade London open, which is 9 to 10. Then you trade an hour after London open, which is 10 to 11, which is the London volume, basically. All you need to be able to do is determine what the next 4H candle is gonna do. Hello from Tajikistan to you. Top G, hi there, my guy or my gal. I don't know. I probably butchered that, bro. Let me put this on the screen. If you guys can help me with the pronunciation there. But hi there. How you doing? How was your week in trading? And yeah, all we're doing today is we're backtesting a bit, trying to build up stats. Tajikistan. I know it's Kistan. Tajikistan. I think I pronounced it right. So what? Tajikistan, let's go. Where is that, eh? Like, which continent is that? Hey, mind me. But yeah, I'm just asking. I'm a bit ignorant. Don't worry about it, sweetheart. But yeah, Tajikistan. Are they? Anyway, as I mentioned, let's go on. As I mentioned, the whole theory behind it is if you trade one session, guys, like if you trade London or New York, all you need to be able to do is if you trade in the volume hours, right? If you day trade and you trade in the volume hours, which is an hour before the open, an hour into the open, like when the open happens. So usually like 9 to 10 South African Standard Time, or if you're in UK, like 8 to 9, right? So you're gonna trade, if you're in the UK, you're gonna trade 7 to 8, right? That's pre-London. Then you're gonna trade 8 to 9, which is the London Open, and you'll trade an hour after the London Open, and that's usually like the high volume times. And when you're trading pairs like pound yen, which has high volume, high momentum in those sessions, all you really need to be able to do to get bias, to understand where you're gonna be trading in the direction. Because if you're trading in both directions, then I feel like you're like a chicken with no head, bro, and you're just running around like, bro, you can take a buy or you can take a sell. So that means like you're not stacking the chances in your favor. Because now if you're gonna trade both ways and you're coming out of an Asian session range, and now if you're looking for breakouts specifically on a pair that performs really great with breakouts, you could get a breakout to the upside, but in really and truly that's a manipulation to the upside to then go to the downside. You know what I mean? And yeah, if that's the case, then you then you might get like caught up. So yeah, that's why you need directional buys. That's why you need a certain direction to trade on a particular session or on a particular day, right? So let's continue with checking my trade. So let's check the 6th. So you're gonna check the 6th. So this is the 6th. So we'll be looking at the previous daily candle. The previous daily candle is bullish, right? So now we want to know whether or not the 4H candle actually agrees to this. Let's check. 4H candle in London doesn't agree. That is bearish. So it doesn't agree, right? That is what it is. Let's see. Bullish. So we have one bearish, we have one bullish. We need, if it is going to be bearish, okay. So what it seems like is that yen is pretty strong across the board. Let's see if that is confirmed. Boom. Okay, that's 3 candles being bearish. We need 5 out of the 6, right? That's 4 candles being bearish, and they're all yen pairs. So what that means is that's 5. So what that basically means is that the sentiment within within Japan basically is that they are pretty bullish, right? So yen have a very bullish sentiment, right? That's why you can see weakness across the board on all these pairs, because the corresponding pair is yen, and if the corresponding pair at the back is showing all the same candle, meaning it's either weak or strong. So if they're all bearish, then that means yen is bullish basically, right? So we have a strong yen across the board. So we have 4H correlation. So what's the chances of the next candle pushing in our direction? It's pretty high. And as you can see, this next candle pushed 40 pips in our direction before closing bullish. Now, yes, the candle closed bullish, but you still got 40 pips in the direction that you anticipated in. Now, that's enough to either get a break even or to get a 1 to 2, right? And that's all it is. Like, all you're determining is is there enough movement within this candle? And look at that. That's London Open, right? This is the London Open 4H candle, this bullish candle right here. We got 40 pips to the downside before we eventually closed bullish. And that to me basically means like, bro, you have more than enough pips to fucking get something out of the markets. You know what I mean? So 40 pips, if you had a 10 pip, 15 pip stop loss, you'd get a 1 to 2 pretty easy. Could get a 1 to 3, 1 to 4, even if you really want to maximize your wins. So yeah. So I'm just spot checking all of my results. So let's go to the 20th of July. Let's go to the 20th of July and check the 20th of July. So this is the 20th of July. As you can see, previous daily candle was bearish. Let's go to the 4H and check what the 4H is saying. 4H, previous 4H is bearish. So we have the daily and the 4H, aligning. And you can already see that the next candle on pound yen is bearish, right? And so if we just measure from the open to the close, we pushed about 40 pips in our direction. More than enough, as I mentioned. And as I mentioned, bro, these bias building exercises, it just shows you how often you can determine what the next 4H candle would do in like live markets, basically. As long as you can really determine what it's going to do, it's perfect. Let's check if we have 4H correlation across all pairs. Do we have it? Don't we have it? Okay, so we have 2 bearish candles. Do we have 3? That's 3. Do we have 4? Okay, no. Do we have 4? That's 4. Do we have 5? Do we have 5? Okay, no. So we only have 4 out of 6. So we don't have 4H correlation, but we can trade because we have the daily and the 4H aligning. And that's perfect. And you can see that the next candle pushed in our direction. So that's, as I mentioned, that's all you need to determine. If the next candle pushes in your direction and you have a directional bias of bearish or being bearish. Now imagine you were bullish on this day for the London session. You bullish. How are you gonna get to trade, bro? If you're gonna trade off from a point of interest, let's say you're trading off from a point of interest in these areas here from a 15-minute perspective, what's the chances of you taking an L, bro? And that's why you need high time frame directional bias of some sort. Like, I don't trade the higher time frame, but I get my directional bias from the higher time frame, if that makes sense. Because if you trade in smart money concepts, or you trade in structure just in general, and the 15-minute structure for some odd reason is bullish here, right? And now you see a morning star, or you see a bullish engulfing, or from a higher low, which is also a point of interest in smart money concepts, bro. It's really the fucking same thing. Or from a higher low point of interest, or order block, bro. Same thing, really the same thing. If there's a imbalance in the push to the upside, now you're seeing all of these things. This candle taps into your order block point of interest, bounces up, and everybody says, oh, bro, I got a bullish engulfing candle, I got a morning star, I got whatever the case may be. You have your buy limit set at your point of interest or order block, right? And then it takes it out because you're trading against high time frame buys, right? And yeah, and even my high time frame bias doesn't agree with a lot of other people, but I'm of the opinion that if you can determine if you have a high chance or a high hit rate at determining where the next 4H candle is gonna go, or the next daily candle, or even the next week, like if you can determine where the next weekly candle is gonna go, and you trade in that direction for majority of the week, it doesn't mean you need to trade for the whole week, but for the majority of that week. Like this week, I had a theory and I had directional bias on the weekly that we're gonna push bearish, right? And that's why I took so many sells. Like I took 3 sells and 1 buy, and I took the buy at the end of the week on the basis that the weekly usually makes its wick on a Friday, right? But it's all the same theory, that if you can determine where this next candle's gonna go, if you scale down time frames, all you need to be able to do is like be able to find an entry in order to take it to that area or take it in the direction that you want it to go. That's simply it. If you guys have any questions with regards to that, you can type it in the chat and we can chat about it. Other than that, I think I'm just gonna go on, check in my sheet and continuing with the backtesting, right? I'll check the comments in a bit, just because I need to use both screens with the Excel on the one screen and then the charts on the other screen. So let's continue. Let's check the 26th of July real quick. We need to go to the daily time frame. Check the 26th of July. Daily time frame. There's the 26th. So we have a bullish candle on the 25th. So basically, we want to know if we have a 4H that is bullish. Do we have a 4H that is bullish around 3 o'clock? What is this? The open is 784. The close is 771. So that's a bearish candle. That's a bearish candle. As you can see, it's a bearish candle. Boom. Okay. That's a bearish candle. So let's see. We know that the daily and the 4H don't align, right? So let's see if we have 4H correlation across all pairs. Okay, that's bullish. We need a bearish candle. What is this? So the open is 848 and the close is 828. That's a bearish candle. So we have two bearish candles. That's definitely a bearish candle. That's three bearish candles. We need two more bearish candles, guys. That's a bearish candle. Do we have another bearish candle? And that's a bearish candle. Perfect. So now we can look for when we get to London, and let's say, for instance, you don't see this happen as of yet, you can't tell whether this is going to happen. The stats say that because we have 5 out of the 6 pairs that we have on our correlation list, the next candle is going to be bearish, right? And what happened? You can see the next candle pushed a total of 79 pips in our direction. So yeah, can you discuss a specific stat in how you enter and your SL? So what I will say is, if you go to the start of the live, right, you'll be able to see how I took my trades this week. I took 4 trades, all the same entries, all the same stop loss placement, everything. And those are live trades from this week. So Shri, if you do want to see how I enter my trades, it's buy stop, sell stops. You can check it. Like, everything is discussed from a 15-minute perspective where I gain my evidence, and then the 1-minute perspective where I enter. So you can check the start of the video, and then from there, let me actually just put this comment. So Shri asks, can you discuss a specific stat in how you enter and your stop loss placement? And as I mentioned, it's at the start of the video. So if you go to the start of the live that we're on right now, you'll be able to see, because I'll walk through all of the trades that I've taken this week, which is 4 trades. And then if you go to all of my other reviews that I have on the channel, every week's weekly review, you'll be able to see that I basically trade the same way as being the same way. The only thing that I do is I just get better and I try and level up with regards to things that pulled up to my entry, but my entry has been the same. My stop loss placement is the same. So if you do want to, you can go check it out. But shout out, Shri. Do you have any other questions specifically? I think personally, the biggest part is, for me, what I've noticed with like traders that are in like starting out, right? The biggest thing is bias building, because a lot of them will come to the charts and go straight to the lower time frames. Like, they'll go 15-minute, 5-minute, 1-minute. Okay, let's see what Shri says. I get your idea of biased, But many times I know the direction, but people get the exact entry and got stopped out and don't have model to enter another trade. Okay, I get you. Uh, I think with regards to entering another trade, right? I think you need to be able to, in your trading plan, have 1 to 2 trades. If I don't just say 1 to 2 trades, if you're backtesting, say you can take 3, 4 trades in a day, and that's where you, because sometimes you'll see that across your backtesting, right, your first and second trade might be losers, but then your third and fourth trade might be winners. You won't know that unless you're actually backtesting and you're going through every single like data point on your strategy, right? So a lot of people say take 1 to 2 trades in a day, but that's for people that know that like the first and the second trade is one of them are going to be winners, right? So you don't have to say 1 to 2 trades. If your max risk for the day is 2%, right, for the day, right? Instead of taking 2 trades, if you're backtesting, say you get 4 trades, and on your fourth trade you're gonna win more likely than not, or your third trade you're gonna win, right? Then why not take 4 trades and split your 2% risk into 0.5, 0.5, 0.5, 0.5, right? A lot of people just subscribe to like what everybody in the industry say. So from like your point of view, you need to backtest a bit more, because it might just be that yes, you getting stopped out, but like you're getting stopped out on your first trade, but in your second trade might play out. But it's just because I don't think you've like taken enough trades like after you lost to be able to definitively say like this is what happens. You know what I mean? Like if you can definitively say that, okay, after the second trade or after the third trade, like I start winning again, then I think you're going to gain more confidence in taking that. Because at the end of the day, it's all stats. And the more trades you take, if you win, sometimes you're going to lose, bro. Don't get it twisted, bro. Like sometimes you lose. You know what I mean? Like if you lose, then it's just part of the game. But it all depends on like how your strategy performs. At the end of the day, if you're going to use someone's strategy, use the whole strategy. So if you're going to like subscribe to like my thought process, I would say use the whole thought process. Like don't try and take bits and pieces of people's strategy and then put it together. uh that's going to take a long time in learning. It's going to take a long time in it's going to take your time and make your time trading way longer, right? Because that's what I did, and it took me like a long time, a very, very long time, right? Until I just said, fuck it, I'm just going to trade, and then I'm going to find what's wrong with my losses. I'm going to find what's right with my wins, and then I'm going to start removing the losses, and then I'm going to add to my wins, right? And that's what I did. So with regards to entries and exits, I get stopped out, bro. Everybody gets stopped out. It's part of the game. If you're getting stopped out more often than not, then it's a problem, because at the end of the day, you want to be trading, and you want to know what your win rate is. I have a mate that loses 4, 5 in a row, and then when he wins his fifth or his sixth trade, and he makes all the money back of all of his losses. But that's because he's trading that specific strategy. It's a smart money Wyckoff type strategy where he knows he has tighter stop losses. He knows he's willing to risk a certain percentage, and that's why he risks 0.3% every trade, because he knows he has the his strategy tells him that he can lose 3, 4, 5 trades in a row, but he's fine with it because he knows when his sixth and his seventh trade comes, he's going to win. Do you know what I mean? And so, like, is it due to like where you place in your stop? Is it due to like your entry? Is it due to like your actual bias building? I can't specifically say. Yes, you can determine bias. Yes, like you can say this is where it's gonna go, but like, does that thing go into your evidence collecting, like where you're doing your analysis and everything? And then what is your confirmations to say after you have the evidence that price action is going up? What is your confirmation to say now you can enter? You know what I mean? Like, yeah. And then like, what is your emotions that's feeding into taking the trade? Like, how do you feel? Are you tired? Like when you do win, what are the things that you do on the days that you do win? Like, is it any different to the days that you lose? So yeah, that's my I think that's my answer to it. And uh if you do want to check the way I enter and the way I exit, bro, and the way I place my stops, you can go check the start of the video as I mentioned. Yeah, Shri, I hope that helped. And yeah. And I hope the backtesting is going well on your end too, if you are backtesting with me. Let me know if there's anything else that you want to know, Shri, or anybody else that's here. Just let me know if there is anything else. I will be wrapping up in the next 10 minutes, so you can shoot away with your questions if you have any more questions. If not, then I'll just continue backtesting. But yeah, shout out for the questions. Let me take a sip of coffee, bro. Yeah. So let's continue with like there's any more questions at the current moment. So let's continue. So we pretty much checked the month of July. Let's go on to August and check August, right? So we'll check the 3rd of August. Let's check the 3rd of August and see what's up. 3rd of August. So you can see the 2nd of August is, okay, no, that's the 4H. Sorry, guys. 3rd of August on the daily time frame. What you can see is the 2nd of August was bearish, right? So you taking a look at a bearish, you want the 4H to be bearish, the 4H lining at London session. Let's take a look. Oh, we have a bullish candle. Okay, so what's the next step? You check your 4H correlation. For do we have bullish across the board? Okay, so pound USD is bearish. Let's see. Bullish. Okay, so what it seems like, I have an hypothesis that it might be that the yen is weak since pound USD was bearish, right? And what you can see is the JPY pairs are all bullish. So it seems like across the board we have a weak yen. Let's see. That's 4. Do we have 5? Boom. That's 5 candles in our direction. Now let's see what the next candle did. The next candle was bearish. Boom. And that happens. That would have been an L for me, bro. It's part of the game. Like, it happens. You know what I mean? It happens. Munib Salih. Yes, sir. Yes, sir. Munib Salih. Yeah, I do stay in Cape Town, bro. I do stay in Cape Town. Yeah. Shout out, bro. Shout out for tuning in. Do you have any questions, Munib, bro? Oh, shout out to the Cape Town boys. What's going on, bro? Yeah, Cape Town boys tuning in. Yeah. I do stay in Cape Town. And just full disclosure, I would have lost this trade. It is what it is. Part of the numbers. Move on, and then you check what the next candle the next day does. Let's move on. Let's do another day. So let's do the 9th of August to see what happens on the 9th of August. Bear in mind, I'm literally just checking my backtesting to make sure that everything is right, what I did. So checking my bias building. So that's the 9th. You can see that Tuesday the 8th was bullish. Let's check what the 4H did. Let's check what the 4H did. So we had a bullish candle. Okay, perfect. So you can see that the daily and the 4H aligned already. Checking the next candle. The next candle had closed bullish, and we can definitively say that it closed bullish. We have a 31.9 pip movement, which basically mean that we would have probably won a trade. And yeah. Now we just need to check 4H correlation across all pairs to see exactly if we have 4H correlation or not. If we don't, then it is what it is. Regardless, we would have had a trading session with the bias that is called daily and 4H aligning, right? So let's see, do we have 4H correlation? That's a bullish candle. So we have 2 bullish candles. So the open is 094. That's a bearish candle. if we get one more bearish candle, then we don't have 4H correlation, guys. What is this? Okay, that's a bullish candle. That's 3 bullish candles. That's a bearish candle. So we don't have 4H correlation. We just have the daily and the 4H aligning, and it is what it is, right? Let's check one more day. How much time do I have left on the live? I have 5 minutes. So I can check 1 or 2 more days to make sure that they are correct, right? Let's check the 23rd of August. So we need to go to the daily time frame, check the 23rd of August. So this is the 23rd of August. Here we have the 22nd being a bearish candle. So now what we want is the 4H being bearish too. So then we have our first, so the first, so this is actually at 7 o'clock. So there we go. So you can see that I'll be trading New York session now, right? So we have the daily and the 4H aligning, right? Then what you can see is, do we have 4H correlation? Okay, that's 2 bearish candles on the 4H time frame. That's 3 bearish candles. That's 4 bearish candles. That's 5 bearish candles. So we have 4H correlation. Do we have 6 out of 6? Do we have 6 out of 6? Boom! We got a 6 out of 6. We out of here. That's what we're saying. It's sold for 10 lots. That's what I do, bro. Put a 10 lot on this baby. And as you can see, the next candle goes up around about 80 pips, bro. That is fucking ballistic, mate. No question. We made through some kilo. Oh, Samo, put the boys on. Oh, shout out, bro. Shout out. Yeah, hey, that was probably back in the day when we were at uni, hey. Yeah, nah, but shout out, bro, for tuning in. Yeah, myself and Sam played pretty differently, if you haven't noticed. But yeah, I think to each their own. As long as the strategy works and is making money, bro, we keep moving, you know what I mean? Yeah, and my strategy has been doing bits, bro. So yeah. But anyway, Munib, shout out for tuning in. Yeah, and if you didn't know, Sam also just moved to Cape Town, bro. So if you want to hit your boy, you can hit him and link up there. Yeah. And shout out once again for tuning in. Thank you, Shri, for the questions, and I hope you go check out how to enter. And for everybody that tuned in, thank you. Have a profitable week. Have a wonderful weekend. In Cape Town, it's fucking raining like a motherfucker. But if you're in a better, I don't think there's a better city, but if you're in a better place with, or not a better place, if you're in a place where there's better weather, enjoy it, bro. Because this ain't it, bro. But yeah, shout out Munib once again. I hope if you are trading, I hope you're whipping it and like keeping your head down, going in, bro. But yeah, guys, enjoy the weekend. From your boy Marcy at the Modern Day Trader. Peace out and all love to everybody in the world, bro. Peace out.